Title: The Fractional Ownership Model, a smarter way to invest in real estate. What if building a diversified real estate portfolio didn't require hundreds of thousands of dollars? What if gaining exposure to premium commercial properties could be as simple as investing in a stock portfolio? For decades, commercial real estate has been one of the most reliable long-term wealth-building asset classes. Office buildings, apartment communities, warehouses, shopping centers, and luxury developments have generated income and appreciation for investors around the world. But for most people, these opportunities have always seemed out of reach. High down payments, strict lending requirements, complex paperwork, and significant capital commitments. These barriers have traditionally limited access to institutional investors and high-net-worth individuals. But technology is beginning to change the way people participate in real estate investing. One of the most exciting developments is called fractional ownership. Instead of purchasing an entire commercial property, investors purchase a fractional interest alongside other investors. This approach lowers the capital required to gain exposure to professionally managed real estate assets and allows investors to build diversified portfolios that would otherwise be difficult to achieve individually. Instead of putting all of your money into a single property, you can spread your investment across multiple real estate sectors and geographic locations. Imagine having exposure to an office building in New York, a logistics warehouse in Texas, an apartment community in Florida, and a commercial development overseas, all within one diversified investment strategy. Diversification doesn't eliminate risk, but it can help reduce the impact of relying on a single property or local market. And that's where blockchain technology enters the conversation. Some modern investment platforms are exploring blockchain infrastructure to create more transparent and efficient ownership records. Instead of relying entirely on traditional paperwork and multiple intermediaries, blockchain-based smart contracts can help automate certain administrative processes while creating tamper-resistant digital records. The goal isn't to replace real estate. The goal is to simplify how ownership is recorded, managed, and transferred. Another important advantage is accessibility. Traditional real estate investing often requires years of saving just to afford one down payment. Fractional ownership allows investors to begin building exposure with significantly smaller amounts of capital, making commercial real estate more accessible to a broader range of people. Instead of waiting years to purchase one property, investors can focus on gradually building diversified portfolios over time. And that's a powerful mindset shift. Successful investing isn't about finding one perfect opportunity. It's about consistently owning quality assets and allowing time to work in your favor. Technology is also changing investor expectations. Many digital platforms now aim to provide streamlined account management, transparent reporting, and easier access to information than traditional investment models. As financial innovation continues to evolve, the experience of investing in real estate may become more efficient, more accessible, and more globally connected. But it's equally important to understand that every investment carries risk. Real estate values can rise or fall. Rental income is never guaranteed. Fractional ownership investments may have limited liquidity depending on the platform and market conditions. Blockchain technology can improve transparency and record-keeping, but it does not eliminate investment risk or guarantee returns. That's why diversification, long-term thinking, and careful research remain some of the most important principles of successful investing. The future of wealth building isn't necessarily about owning more properties. It's about building smarter, more diversified portfolios using modern financial tools and disciplined investment strategies. Whether you're an experienced investor or just beginning your financial journey, understanding concepts like fractional ownership and digital asset infrastructure can help you stay informed about the changing landscape of real estate investing. The opportunities are evolving. The technology is evolving. And the way people build wealth is evolving too. The real question is, will you simply watch these changes happen, or will you take the time to understand them and make informed investment decisions for your future? If you enjoyed this video, subscribe for more content on investing, financial technology, wealth building, and the future of finance. And let us know in the comments. Would you consider investing in fractional real estate if it helped you build a more diversified portfolio? Disclaimer: this video is for educational and informational purposes only and should not be considered financial, investment, or legal advice. All investments involve risk, including the possible loss of principal. Fractional real estate and blockchain-based investment platforms may involve liquidity, platform, regulatory, and market risks. Always conduct your own research and consult a qualified financial professional before making any investment decisions.